Hello everyone, hi, welcome to the channel of Wall Street Mojo. Friends, today we're going to learn a concept which is known as debit note versus a credit note, and we are going to understand the top 7 differences with the help of the infographics. At the very initial end in today's business, the value of the debit note and the credit note is unparalleled. So since every small business becomes big in almost no time, it's prudent to understand debit note and credit note very clearly. So let's first understand. See, debit note is official, you can say articulated form of purchase return. What do we say? Purchase return. So though the debit note, the buyer intimates the seller that they are returning some goods that they have bought and mentions the reason behind it. In the similar manner, the credit note is also an official etched out return form of stating the sales return. So this is what is the debit note. Before we get into the difference, you should know some of the basic lined up things which will help us to crack the differences. And though the credit note, the seller intimates the buyer that the money for which the debit note is sent is being returned. So understanding this two in detail can revolutionize one's business. So in this tutorial, we'll throw some light on these two concepts and find out the comparative difference between the debit and the credit note. See, without much ado, let's get started with the head-to-head differences between debit note versus the credit note with the help of the infographics. Now we'll begin. The debit note versus the credit note. We start with the meaning. Debit note is articulated form of purchase return. That's what we just learned. To the seller, a purchase return to the seller. So one must have purchased from the seller and they must have realized that the goods are not improper or the goods are not as per the specification. Then they may return. So the purchase has been returned to the seller and it intimating the reason behind it. So reason can be anything. It can be damaged goods, not as per the specification, and so on and so forth. The credit note is the similar articulated form of the sales return. Okay, sales return, and informing that the purchase return is been accepted. It's quite clear now from this. Now, what is the another form? The purchase return of the goods and the sales return of the goods. So basically what has been done in the second difference is just the breakdown of what exactly is in the definition. This is the debit note is related to the purchase return and the credit note is related to the sales return of the goods. Now, who is exactly sent? So the purchase of the goods, who found one or more discrepancies, defects in the goods. Basically the purchaser who thinks that the goods have some discrepancies or have some defects, so he will send the debit. And over here, the sales team, the seller who has sold off the goods, he will send the credit note. So this is the difference, major difference. Now, the accounting entry. If the buyer accounts, supplier account is debited. If in the buyers, that is in the purchaser account, what we are talking here is there are two accounts, right? There is one that is known as the purchaser account, and over here there is a seller account. So in the purchaser account, the supplier account is debited and the purchase return is credited. Okay, who is the buyer? The purchaser, and the supplier is the seller, right? Let's say the seller from whom we purchase the goods is let's say the 𝐾𝐠 trading company. Okay, so their account will be debited and the purchase return is credited. The PR, the purchase return, will be credited. So this is going to be the entry. So what we are discussing over here is the journal entry. Right, now in case of the seller, in seller's account, sales return account is debited. That is, the SR account is debited because it should be debited, and the customer account is credited. The sales return account is debited and the customer account is basically the credit. Customer means the purchaser. So let's say we are the purchaser. So let's say the Wall Street Mojo is the purchaser, let's say. So the purchaser account has been credited over here. So this is how the journal entry will go about in both the cases. This is in case of the debit note and this is in case of the credit note over here, the credit note. So purchaser, journal entry, seller, credit entry in case of debit and credit note. Okay, let's move ahead. The result, the purchase account is actually been reduced. Why? Because there's a purchase return. It's as simple as that. Let's say you have purchased goods from the seller, that is from the KG traders. Let's say you have purchased of $1 lakh and there are goods which are defective. That means purchase return. So those goods are amounting to 10,000. So your final purchase should be recorded at 90,000, right? As simple as that. The sales account is reduced over here. Same in the similar fashion, the sales value, let's say the sales that Wall Street, that basically in the KG trading company, they have done a sales of let's say $1 lakh. So if there is a sales return, then 10,000 will be deducted over here in the similar fashion and 90,000 will be recorded. So this is the end result. The sales account is reduced and the purchase account is reduced. As simple as that. Now, what is the ink used? Over here, they use a black ink, a blue ink, and over here, the red ink. So that's a customary thing, and even it's a discretionary thing. Now, what is the entry in? The purchase return books mostly, and sales return books absolutely. So we know that purchase return and sales return are the details that we are talking about here. So which books it should get affected? The purchase return and the sales return book. Now let's try and understand the key differences. See, even if the debit note and the credit note are the two sides of the same coin, there are some of the few key differences between them. Okay, that debit note versus credit note. The debit note is usually issued by the purchaser and the credit note is usually issued by the seller. But the debit note can be issued by the seller when the buyer erroneously records more, and credit note can be issued by the buyer when the seller underchanges the buyer. Okay, these are the key differences that we are talking here. The debit note is prepared by the blue ink, we just saw that, and because it shows a positive amount, and credit note on the other hand is prepared with the help of red ink because it shows the negative amount. Okay, now debit note is issued because the purchaser wants to state that he has been overcharged. He has been overcharged by the or there are percentage of the defective products included in his purchase. And credit note on the other hand is issued in return to the debit note, stating that the seller would credit the purchaser with the amount which was found defective or which was been overcharged. In both the scenario, the debit note does not only affect the purchase return account, right? It may also reduce the purchase account, right? The purchase return account will increase, but the purchase account will decrease. On the other hand, the credit note also does not affect only the sales return account, because the sales return account over here will increase. A credit note also can also be issued erroneously for overcharging, and at the same time, your customer account will reduce. So basically, you can say the sales will reduce over here. So this were the key differences between the debit note versus the credit note that we have discussed here. So based on this, we can make some final conclusion that understanding the debit note and the credit note is really a vital and important for any business, because at different times you may need to issue each of this. Now, while issuing a debit note or a credit note, one thing you should remember that you cannot issue a note just like that. You should do your own what we call as the due diligence, which is the most important thing, and see through the goods yourself and see whether there are any other alternative. If you have, like for example, while issuing a credit note, what you can in return to the debit note, many sellers, they issue credit notes stating that the amount for which the debit note is issued, it can be used by replacing the goods, that is without returning the amount. So if you understand this well, a lot of issues of the business will solve and build great relationship with your stakeholders in other business, and you would also thrive as a business. Thank you everyone for joining the session.